Fresh documents tied to Jeffrey Epstein's case, including what sources describe as a Trump-related photo, were quietly pulled from a DOJ release site. The dollar barely budged, but beneath the surface, political uncertainty is building again. Let's break down why this matters for the dollar. Over the weekend, documents from the Epstein legal saga were reportedly removed from a DOJ document release site. Sources tell us a photo allegedly tied to Trump was among them. The removal happened without much fanfare, but it speaks to a bigger story: ongoing legal and political narratives that refuse to fade. While DOJ policy limits what I can say about ongoing matters, this adds to a growing list of political uncertainties floating in the market. A small business owner in Miami told me last week they're worried about noise that could destabilize things ahead of 2024. It may seem disconnected from the economy, but in today's hyperconnected world, political headlines feed directly into market sentiment. Here's the dollar mechanism. First, political uncertainty. Markets hate ambiguity. When political legal narratives resurface, especially involving high-profile figures, it creates a risk-off tilt. That's dollar positive in the short term because investors seek safety. Look at today's 10-year Treasury yield, still holding above 4.6%, reflecting this cautious stance. The dollar index, DXY, is up marginally from yesterday's close. Second, institutional credibility matters. Any suggestion of selective document handling can fuel institutional skepticism. The inflation surprise index shows markets are hypersensitive to uncertainty. Third, timing is everything. We're in an election year cycle where political narratives can escalate quickly. My base case: this keeps political risk premium elevated, which supports the dollar as a safe haven. But the real question is escalation. If this turns into a broader legal political narrative that threatens institutional stability, we're looking at stronger dollar support. For everyday dollar users, expect continued volatility in travel costs. If political uncertainty grows, U.S. tourism could face headwinds, affecting the dollar's travel purchasing power. International payments might see more premium pricing as banks price in political risk. For savers, the current yield environment remains attractive. High-yield savings accounts around 4 to 5% are still your friend. Watch these triggers. 1. Any escalation in legal narratives. 2. Poll data showing political uncertainty affecting voter confidence. 3. Treasury yield movements. 4. DXY breaking above recent highs. 5. Any Fed commentary acknowledging political risk premium. If you're a business owner, hedge currency exposure. This uncertainty could persist through election season. Here's what could invalidate my take. If broader institutional concerns fade quickly, if the economy shows stronger resilience that overshadows political noise, or if markets focus on growth rather than political narratives. I might be overestimating political impact. Sometimes markets surprise us by looking through temporary political distractions. One-sentence summary. Political uncertainty from the Epstein document removal adds to existing risk-off dynamics, modestly supporting the dollar while we wait to see if this escalates or fades. Not financial advice. If you found this helpful, hit like and subscribe. Comment below with your take on how political risk affects markets. And tune in next time when I'll cover China's latest stimulus announcement and what it means for the dollar. What would change my mind? A clear institutional response that reduces uncertainty, or strong economic data that shifts focus completely away from politics?